How's it going, guys? TGIF, right? You know, in the morning briefing, I kind of thought we were just gonna hold the line and take it into the close, or I kind of was hoping that's what we would do. It's certainly not what we are doing. It would have been a great Monday, hold the line into Friday, get into the weekend, and then on Monday come in with this beautiful gap down, big pin bar reversal and a rip back out. That would have been really nice. But instead, we were holding around the cog line 64.11, and then finally we just fell out of bed. That was the 1236 on something that I measured. Jump out here and see what it was that I measured. That low from November 20 all the way up to the all-time highs. That measurement lines up with the 1236, and you can see that we broke that. We were holding it though. Like it was worth marking out, but now we're down, we're below it. So kind of done with that. Don't need that one anymore. We have a gap to close. Um, we left quite a few of those behind, actually. We're going to need them on the way back out. Thinkorswim's kind of cool. You can draw things on different layers. So want to create new drawing set. This way you can turn them on and off, right? Daily gaps. And then, get your line type the way you want it. Just set it there so I can trick it out. Right side only, make it skinny. Maybe I like to change the color of lines depending on how obvious I want the line to be. That looks pretty good. Then let's see, I'll show a price on there. Doesn't need a title. We'll make that default. 64.73 is the ADR half. That's going to be lower than the Monday low that we're already focused on. And we're not there yet. Once we get there, we'll have to see how we got there. Did we just, drop down in a single shot, or did we continue to work our way down in a neat and organized manner? Really, a lot of that is going to be likely how we turn or how we respond when we do get there. First, basic technical analysis teach that you can measure that.
Kimberly, are you replaying that for us?
Office manager found the bodies when she came in at 7 a.m.
You get a visualist. She'll have that.
I thought you were reminding me of something I had said, but I'm just going to mute you till you get that figured out. Remind me if you can't unmute, and I'll unmute for you. But so at some point we are going to go back up, right? It wouldn't hurt to get some levels laid out in advance. You could use those for targeting purposes, of course. What I marked out here was the close. Not that one. I missed that one. I'm using trend candles. So my green candles that are filled are showing that close was lower than the open. And the green candles that are hollow shows that close was higher than the open. Same thing with red, but in the opposite direction. So solid red, close was lower than the open. Hollow red shows close was higher than the open. The reason it's red, though, is because this close is still lower than that close. That's why we have a red candle. Or with this one, that close was lower than the open, but still higher than the previous close. Yeah, I think, Joe, I got you muted, buddy. If you can't unmute later and you want it turned back on, just let me know. I'll get you fixed up. Sounds like you're wrestling with your keyboard or something. It is open mic, guys. You're more than welcome to chime in, chat, ask questions, participate. So, I only muted because it was distracting. It sounded like you were watching other videos or fighting with your equipment. No, all good. All good. I as one of the reasons that I don't really join in a lot of streams where I'm not talking is all of the different audio levels, right? Like some people come in real quiet, you can barely hear 'em, and others come in and they're so loud they're like blowing your eardrums out. It's like my worst nightmare. I miss the days in the oil field where all you heard was the brake all day. That was a really loud environment. All right, so I laid out a couple levels. Mainly the levels that I marked are gap close, and of course I'm on a daily. So if you was to go to a weekly, you could spot those as well and see which ones of these dailies was actually a weekly. I am looking at the SPX, which means for the weekly, we would be looking at a Friday close versus a Monday open. And none of these match that description. So we're good. We don't have any weeklies. I like a big weekly gap. Not, I shouldn't say big, but a weekly gap is a really good gap to mark, especially in equities, Apple, Google, that kind of thing. It's always good to mark those out because they will become targets more often than not and like self fulfilling, right? We go there. This gap down was what I was hoping to get on Monday to start already gapped down and then leave a big pin bar behind and rip and rally back out of it. Here's one of those examples right there. That that's a perfect example. We were negative, we kept getting lower, we closed here, and then we gapped down and opened there, dropped into the 50, came back up and closed back inside that previous day's range and left a really nice pin bar behind. I love those days. Those are really great trading days. And I don't know, maybe I'm just being greedy, but that's kind of what I was wanting to see on Monday. And now, we could still get it. We could, but if we close down like this, then it's less likely that we're going to get that on Monday. So it's kind of sad, but that's all right. Here's another one. It's not as good. Well, I don't know, maybe kind of good. We closed there, opened here, did the drop and the loop and the run back up. We got back inside of the previous day's range and broke out of the top of that range and kept on going. Pretty good, right? I mean, I'd take it. So, if you day trade, coming out to the daily chart and the weekly chart can offer all kinds of valuable opportunities. And if you don't day trade, well, then you definitely want to be looking at the daily and the weekly just to spot easier charts to read and possible trade ideas that way too. This market is not slowing down. In fact, it looks like the rate of change is speeding up. We were talking about that in the live stream this morning. And it's one of the requests that we have for a topic to cover today. So let me get the news turned on. I kind of feel a little, oops, that's the wrong one. I was using my Steam Deck and still trying to get used to the buttons. Finance Juice and Market AI. All right. Maybe this will give us some idea on what the heck is going on out there. We can see the dollar really picking up, right? US dollar Japan is up. That's nice. See what the Qs are up to. There's our bleed. And maybe we could find out the why, right? The VIX just shot up to 31.4. with the VIX above 30, there is no rally, right? So if we're going to see the market try to turn around today and go back up, we're going to have to get back below that 31, probably below 30. So that's going to be a key thing to watch if you're trying to spot a reversal rally today. I know we've only got like 2 hours left, but if if you're looking for it, that's what we're going to need. Well, it looks like the Stock Traders Almanac called it pretty good then, didn't it? I don't have a copy of it, but I've seen um, posts that reference the almanac, and they've always been insightful, especially when it comes to things like seasonality, um, oh, election years, and that sort of stuff. I've always thought that that Farmer's Almanac was pretty smart. I mean, I wouldn't put a trade on because of it, but it can get you looking in the right direction, and that's pretty cool. That's history, and that's one thing about the market that is an equalizer for all of us. Once you learn that the market almost never does something new, that everything you see has happened before, then we can take that and run with it. We can try to find examples of what we really like from the past, study it, and try to figure out how to spot it again in the future. There's a really good website that for years I used to do all this on my own. And I had a subscription here for almost 2 years, but I found that I wasn't using it. And so I got rid of it. But what was really awesome about this place is it validated everything that I had already been doing as a trader for years. So I absolutely loved it. If you want to get some idea of what continues to cycle through the market, these days and these signals that repeat over and over, Edgeful is a really good place to go. It's not free. And I had a great price because I was grandfathered in when they were really new, and it was crazy cheap at the time. But I didn't need a website to validate to me my own system. So I used it for a little while, and then I carried the subscription for almost 2 years, barely using it at all. I finally got rid of it. I don't need it because I already trade this way. But if you want more insight into the way markets just repeat over and over and over again, and get some statistical value onto those numbers, like how often do we break out and fail, or how often do we break out and hold, and what if it was a Monday versus a Wednesday breakout. All of that information is on this website. It's really cool, really insightful, and they do have tools that you can link to your trading view. And yeah, I mean, it's neat. I outgrew it. I don't need it. But if you have never been here, swing by, check them out. They've got some great stuff. So, either way, for whichever one of these alerts we are continuing to bleed off, maybe we take a look at stockcharts.com. See what's up with the bond yields. The 10 and the 30 are up, which means bonds are down, yields are up. The 20-year is down, so bonds up, yields bonds down, yields up. It just swapped, right? It was showing yields, now it's showing bonds. The dollar's up just barely, but it's up. All right, we might circle back. So the request was a conversation about, I believe, about these pullbacks and measuring markets. So generally speaking, we don't track markets that just fall in a straight line, right? We don't track markets that just run in a straight line. Most markets are systematic, especially in an organized selling environment like we've been in. CTAs have been slowly unwinding a little bit at a time. And so we've just been easing our way down, 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 and down. In that environment, every candle textbook out there talks about how you can measure the moves that are taking place and gauge whether or not the trend is still intact, if the trend is increasing in strength, or if it's decreasing in strength. Not only the trend itself, but momentum, and whether or not momentum is increasing or whether it's decreasing. So, generally speaking, if all you have is a big bar, that's not going to help, right? If I just zoom into this right here, it was just two really big bars, not helpful, right? Like, thanks, but no thanks. It's not to say it's completely worthless because the bar is outsized. That tells us a lot. And it closed in the lower part of that bar. But really, that's where its helpfulness ends. So we need something that we can at least read. When it comes to having something to read, we can sort of start to see it now. But I'm going to change my chart here in a minute that will make this a little easier to see. But that's the back and forth that we're looking for, right? That sort of behavior. In that back and forth, we're trying to gauge how far we fall and then how far we pull back, right? So in the textbooks, they tell us to measure these legs and then measure the pullback and use that to extrapolate the next target. And you can do it whether we're falling or we're rising. It doesn't matter. For a moment, I'm going to change my chart style and we're going to turn it into a line. And that makes it easier to do this sort of talking, right? There's what I drew out from close to close rather than having all those candles there. So the textbooks are going to say, you know, that if we wanted to measure the pullback part, the counter trend, we could measure that. And the next time a leg happens, we could take that drawing and set it here, and it'll show us how far we should pull back.
Tutto bene?
No, malissimo, dimmi.
C'è l'allergia?
All right, so that's what we're looking for here. How far we pulled back. We take that new pullback and we compare it to the last pullback and try to gauge, are things increasing? Did we pull back steeper than we did before? Or are they decreasing? Did we not pull back as far as we did before? And we use whatever the outcome is to tell us more about what's happening in the current move. Now I'm on a 4-hour chart and a daily chart, but you can do this anywhere, and you can do it on any kind of time frame. So if you was in a 30-second, a 3-minute, 5-minute, it doesn't matter. What we're looking for is trying to understand price as it's moving and looking for the depth of that pullback and the new leg lower, right? So this is what we would call a leg, and this is what we would call the pullback. You could call it counter trend, right? If you want to call it that. And you could call this the impulse. There's a lot of names for these things. I wouldn't get too hung up on the naming of things. You're just looking for the long move, a lot of candles, we'll say it that way, because long, when we're going down, might confuse people. You're looking for a lot of candles and then a short move in the opposite direction, all right? Yeah, counting legs. You know, we had Brooks in here in an interview. If you haven't seen that, it's worth checking out. He was really popular with a moderator that we had working for us for a couple of years. I couldn't get into it, really. I mean, he's got a lot of great material and it's worth checking out because one thing that he does that I really love is he takes a picture of every single trading day. And he's got years of those days saved. And then he's got neat little names for the different kind of days that we have, right? And so because of that history, he's able to look at a day and say, "Oh yeah, no, hey, I know this day. I've seen it before." And he's got all these lists, right? So he can say, "This is the um the the ABC day, and I've got 50 charts from 50 different days that all show the same kind of ABC day." And that's really awesome. That's great. Unfortunately, it's not free, right? It's his, not ours. So you would have to go and get a subscription to his service and have access to those charts. And it's a lot. Like he's been around for a long time. I've got clients that have gotten access to that stuff and it is a massive library of material. It was interesting to me though when I met him that he was doing that because I was doing that and I felt vindicated, right? Like, hey, that's really cool. Now I don't save every single day. I shouldn't say that I do what he does because I'm not saving every day, but I do look for repeat days, days that are just like a day that I know and love and that I've studied because I have my favorites. If they're not one of my favorites, I don't care to study it, right? I don't care to trade it either. The um the interview is on our YouTube somewhere. So if you was to go to YouTube and type in Bullish Bears, um, Al Brooks, you should find the video. It was like 2 hours long. I think Lucian interviewed him in the Bullish Bears. So that's um that's why it was 2 hours long. I took that video and I cut it down to like an hour, maybe 45 minutes. I cut out, he talked about his mom and all kinds of stuff, right? I didn't need any of that. So I chopped it down, but I don't think I have the public version. So I guess that doesn't do you guys any good. You have to just watch the long one. I don't agree with his style of trading personally, but to each their own, you know. So with these measured moves, I need a different, no, that'll work. When you measure the pullback, you can turn on the tool that gives you all of the data. So we can turn the label on. I'm going to just make it on hover and we'll save that as default for the moment. Yeah, that'll work. So this is the distance of that pullback. Obviously, it's bigger than this previous pullback. Come on, stop it. From back here. And it's a little bit bigger than this one. So we would have started with this one. That's our original. Then we had this one. That one was bigger. And I'll just stop there for a moment. We can see that price went further than it did the last time. That tells us something, right? It tells us that they were slower to come in. New traders were slow to replace those that left. When I see a move happening, we rolled over, we started to fall, and people start taking profit and we come up. I want to see aggressive traders jumping in there, happy to take their place and feed that move to continue going in the direction that we were going in. When we go higher than we did last time, it shows that they are less aggressive on piling into that move. So it's a little bit of a warning, right? Everything that we do with the measurements tells us something, as long as we're looking for some kind of information, right? So for me, this shows that they were not as eager to pile in and continue this move. And it shows possibly that there was more people getting out than there was last time, right? So you can kind of read more into it. Here, where it was a smaller move, they were a lot more eager to take advantage of the pullback, and they jumped in without it pulling back very far at all. So once we've analyzed it, we can update the drawing, and then we can lay that on the next pullback when the pullback starts, and we can see, hey, how far did that one pull back? Same thing, we're just looking for clues, right? As much information as we can get to try to better understand how this move is unfolding. And is it gaining strength, picking up speed, or is it losing strength and slowing down? Kind of the whole idea, right? The same can be said for the move itself. What we were looking at was the pullback, the counter trend, but we can take the original move as well. And then the next time we pull back, we can apply it. We pulled back here. That wasn't very much, right? And we can see on the next leg down, we didn't get as far before we stopped, right? Or if I was to back it up and use smaller versions, there's the impulse. There's the pullback. There's another impulse. That was close. There's the next one. Kind of close. Less, though. The moves were getting smaller, and they were stopping to take profit sooner. Same thing there. Now, what I should be doing is updating the drawing for each new location. You can use the same location throughout, like I've been doing, but if you get a bigger move or a smaller move, you should update your stick, right? So this is the updated one. We could use that. There's the pullback. Actually, like there's the pullback from this move. There was our next stopping point. It's not perfect, but pretty darn close. And then the counter trend and the next move. We could update the drawing, although that was so close, there wasn't much to update, but we'll update it with whatever we've got. A new counter trend and then a new move. Now, they overshot it. We had a slight pause, and then it really took off, right? And shows that everything accelerated again. So that was the idea, right? That's what I was showing in the live stream this morning. The idea is you want to get good at this and you want to get fast at it. It's not about getting it to the tick precision perfect. It's about trying to understand the moves that are happening so that you can make a more informed decision. Do I want in? Should I stay in? Should I get out? Right? That sort of stuff. Don't struggle with every nuanced tiny little piece. What about the wick? And I don't like the angle of the line. Let that stuff go and just focus on better understanding the pullbacks and the legs and where we should go next and where we should pause next. Because that's really what we're trying to focus on, right? Now, depending on the kind of trading that you do, you should be able to use this logic everywhere. Intraday charts, daily charts, weekly charts, it shouldn't matter. And the funny thing is, you can use the same tactic on indicators moving averages. You can measure Bollinger Bands and Keltner channels. It works, right? Even on things that aren't even necessarily priced, like VIX. VIX isn't some chart, right? It's a math formula. It's basically the options that are being traded on the SPX. So with that in mind, it's not even getting necessarily bought or sold. I mean, it kind of is because you can trade it, but it kind of ain't because you're only trading the options on the VIX. You're not trading the VIX itself, and you can't because there's no shares of the VIX, and that's because the VIX is just the SPX's options. So you can trade the options of the SPX. I mean, if that don't hurt your head, I don't know what would. So let's go to the SPX here for a second. The VIX is the 30-day implied volatility, right? You got a 1-day VIX if you type in VIX 1D, or a 9-day VIX 9D. So here's a 31-day VIX right there. And it says 30.05. Here's the VIX, 30.96. It's a little off, about 96 pennies off. But we were looking at a 31-day VIX, not a 30-day VIX, right? And this is a 30-day VIX. So if I had found one that was 30 instead of 31, it probably would have been spot on perfect. Here's 30.95 on the 28-day. Right at 28-day, right there. 30.95 right there. And what do we have? 30.96 right there. All right, so that's the VIX. You'd be surprised when I show people this. They say, wait, what? That's not what I thought it was. I get it. They don't necessarily make this easy, especially in a textbook or some random weirdo's video, some, Joe Schmo and on YouTube. Well, I cannot type. I need a pinkies. Don't cut your pinky off, people. You really need it. You would think after 20 years without a pinky, I'd have it figured out, but I still ain't got it figured out.
Thanks for that, Sig. Words of wisdom there.
Yeah.
I told you to get a 3D printer and print you a new one.
I like that idea too, because you could put like little go-go gadgets in there, a flashlight, cigarette lighter. I mean, I don't need a cigarette lighter, but maybe I need to start a brush fire or something. I think it'd be kind of neat. How you doing anyways?
Okay. Did fantastic in the pre-market session with MES. I made with just 2 contracts, I made over $300.
Very nice.
Oh God, yeah, it was fantastic. The options, however, have been well, it's just not been any good clear entry points for me for doing the credit spreads. I could take some way out of the monies, but they're just not I'm in a call credit spread right now, but it's kind of floundering.
Connection lost.
Do you often use the ES product, the S&P in the Globex?
In the Globex, wait, I'm not sure I understood. In the Globex, I do MES.
Right, the S&P. I use
yeah.
I use the NASDAQ in the Globex.
For me, the issue with the NASDAQ is I just don't have the pace with it. I never quite get the rhythm right with it.
You said that so well. the rhythm, because that thing has moves all on its own, right? Like it's listening to a song and dancing to it, and you're dancing to a completely different song. You'll just step on each other's toes.
Exactly. The pulse of the ES I get, but not the NQ.
The MNQ in the Globex is my that's my sweetheart right there. But once we get into the regular trading, I just go to the ES. But even when I have my large account open, I still don't really trade the NQ as much as the MNQ, because the MNQ has the volume.
I hadn't paid attention to it in some time, so I don't know, but
The MNQ has more volume than the ES and the MES, sometimes combined.
that's kind of cool.
I know, right? Usually when I say that, people call BS and then they have to go chart it and look at it.
I mean, you can bring it up easily enough in Thinkorswim or any of your brokerages usually have a watch list with a volume column in it.
Yeah. So we add the MNQ and then we add the NQ. And on my Trade-of-8, I keep them all charted, especially the continuous, so that it'll just put all of the volume in there for you all combined. That's helpful. On Trade-of-8, you use it's the @ sign, the ampersand, to get the cumulative.
What?
If you want to see the continuous contract on Trade-of-8, use the ampersand, the @ sign. Otherwise, on Trade-of-8, you got to look at the contract that you want, right? The M series or the H series, whatever series you want. But if you want to see the continuous contract, use the @ sign.
Yeah, because I asked ChatGPT about that, and it said use like MNQ space pound colon pound or something like that. Anyway, it gave me some screwy looking symbol, and I put it in, but it worked. But it had an unknown character in there that Trade-of-8 recognized, but I didn't know what the character was. So
That's weird.
yeah.
So here's the MNQ, 1.6 million contracts traded today, and the ES 1.3. But in the Globex, sometimes the MNQ will have more than the ES and the MES combined, which is a really nice signal to show me, are the big dogs playing? Because when the big dogs come in, they'll hammer that ES, and it'll really get some flow in the pre-market. I know, right? It's I get 90% of all my trading done in the pre-market. I never know how busy my day is going to be, and I got to eat, So it's like I better get my getting while the getting's good. And if I get more in the day, okay, I'll take it. But a lot of times I don't like what we got, or I don't have time to trade it. I'm busy, so I make sure I get mine in the Globex. But it is the NASDAQ, and it can get a little rowdy, even with having the most volume. As we can see here, it has the most volume, but it is the NASDAQ. It can get rowdy. So you got a short call on right now, you said, SPX?
Yeah, it's going sideways. I got in at 215, two contracts at 215, and it's just stalled right there in a barcode at the moment. It could go back north against me, but I'm hoping it's going to go down to the ADR low.
Yeah, that's
Looking
what
at
I would have thought. I would have
I'm
thought
looking at the 5 minute. Yeah.
I thought for sure when we got lower than the ADR half, and especially through the mid, I thought, oh, that's it. We're going to go on down there. But it sure does look like we stalled out. And we are
Yeah,
putting in a bit of a reversal, ain't we?
a little bit. I may just go ahead and cut it because I'm at $2. So there's no profit in this trade hardly, but
82 is an old school cog line that we don't use anymore. And if we fail 82 here and we close underneath it where all these wicks are, I would get out of it. But if we hold here, especially holding above that 82, I'd wait up. Oh wait, no, you're short, right? You got short calls.
yeah, I'm
If
short.
if we close above that 82, and I would start looking for an exit but we're in this little micro box right now, right? So one
Yeah.
headline is all it's going to take, and you're going to be gold or you're going to be kicking the Roomba.
Mm-hmm. Very, very true. Come on. I think it's going back up to the Bollinger Band midpoint. There it goes. That's okay.
How many of you guys
Boy,
run trading drills?
I used
What?
I used to play ping pong on paper. Drove me nuts.
A trading drill is like well, kind of just any drill out there. If you think about basketball drills, that's usually the analogy that I use. You send kids to basketball camp and they park them on the free throw line and tell them throw 1,000 free throws. Well, at the end, he's going to be better at free throws than he was, hopefully. But it really didn't teach him to play basketball. It just helped him throw those free throws better. When it comes to trading, we can pick one part of the trade and say, I want to work on this. Maybe you want to work on staying in longer or getting out sooner, getting in at all, just getting a better entry. Whatever it is that you want to work on, you can turn that into a trading drill, and then you can focus on techniques so that you can improve that one thing over and over and over again. It's only going to help you fix that thing, right? It's not suddenly going to make you good at picking market direction or analyzing flow. It's just going to help you with one single aspect of the trade. Trading drills. When I bought my lifetime license to Jigsaw, I got access to all their material. And one of the things that they highlight to you as a new Jigsaw user is that you should run some drills. I had never even considered trading drills before I seen them talking about it. So that got me curious. I dug deeper into it, and sure enough, there's quite a bit of drills out there. And of course, you can make your own, because you know where your problems are. So you can try to devise drills that help you solve whatever problem you're having.
Would that mean like going on TradingView and using their that where you slice off a part of a trade and then you step it through? Is that is that like a drill you're talking about?
No, you would want to go to paper and then enter and exit working on whatever thing that you wanted to work on, but on paper, right? So I've got videos on the Bullish Bears on this, but suppose let me just go to Tradibate and start a paper so we can kind of talk it out. But just to mention, there are videos on the Bullish Bears about trading drills. So no matter how far we get today, you can circle over to that too and watch those. And I've made a few. One of the ones that I made is called a twofer. And it's designed to help people use smaller stops. Paper. Okay, just for notification, anybody watching, I am logged into paper. If you see me taking a trade, I have no risk. So don't follow what I'm doing with live money, please, because it won't hurt me, but it will hurt you. Now we got that out of the way. I'm on a paper account, we would want to have a dome. At least I like a dome. It's how I tend to do things. So suppose I wanted to work on something like the twofer. I want to work on using smaller stops. That'll be the drill that I want to focus on. My intentions would be to devise something that helps me work with smaller stops. Well, why do small stops generally cause us to lose? The answer would be, well, because the market wicks us out before we even have a chance to do anything. And then it runs away, usually in the direction that we wanted to go, but we're not in it because it stopped us out. So wicks are the problem. But wicks are a part of this fluctuation that we can see here. Let's change this to the ES or the MES. It doesn't really matter to me, either one, just not on the NASDAQ. All right, there we go. That's a little slower. So when these wicks are happening, it is just a part of this fluctuation that we're seeing, right? The bid and the ask getting a little wider, a little thinner, and then this gyration here. So I could put the chart on a really small time frame because I want as many opportunities to work on my drill as I can. I can't sit there, for 15 minutes waiting to get a chance to run my drill. I need to get in and out, in and out, in and out, in and out. And this isn't about making profit. It's about me wanting to better time my trade so that I can use a smaller stop. It would seem to me that if I use a bracket order, that would help, right? So we'll go in and we'll build a bracket order. We'll turn that on. I don't have one, so we'll make one.
Yeah, it's interesting. That's one of the reasons Jeremy used to talk about practice trading on the 5-second chart, because you get so many more opportunities to look for the trade. But I tried, the 15-second and all that kind of stuff because the 5 was just too, you just had to be so intensely glued there to watch it.
He does make a valid point. If you want a lot of opportunities, go to a smaller time frame. But man, it'll shake you up, So I did build a bracket order. I've got a 2-tick stop and a 4-tick profit. Now remember, this isn't about me making money. This is about me trying to not get stopped out. The take profit doesn't even need to be there. I could just exit on my own. But me knowing me, I would put this on and get distracted, get to chatting with somebody, and if it didn't stop me out, I'd be, in it for an hour and not even be paying attention to it. And so it'll just kick me out, right? I can go long, I can go short. And so if I wanted to work on this trade of better, tighter stops, then I'd want to be able to monitor price. I like order flow, so I'd want to see the tape, preferably a raw tape, so I can just see tape speed, and keep my eye on some form of a high or a low so that I can lean on something to be able to take that long or take that short. And then at that point, we just get in. I can either buy market or just, use the button, wait for it to come to me. Notice where I'm at. I'm basically on this open. That one's closed. That one's open. So I had 3 of those just sitting there. And it's got a 2-tick stop, whether I like it or not. Now that was an order just waiting in the queue, and it's very likely that that'll stop me out because I didn't time anything with the order flow. I didn't time anything with the way price was behaving. I just picked a spot on the chart and put my order there, and sure enough, it's not going anywhere. I had no signal of momentum, no signal of continuation or reversal or anything. All I had is a previous structure when I looked left. Yay, the trade worked. What did I learn from that? I didn't have any momentum. I didn't have any trend. I didn't have anything, and I got stuck in a trade. It worked this time, but I didn't like that outcome. I want to go with the momentum. I want to go with the move, and I didn't. I had a resting order, and I had to wait for a move. So you learn from the drill as you go. You continue to run the drill over and over and over and over and over again, and you get better at the one thing that you're working on that is designed to help you with that specific drill. this drill would force you to use a crazy tight stop, and it'll teach you a lot about that tight stop, and you'll get better at trading with tighter stops the longer you do that drill. Now that's just one drill. There's lots of drills out there. Some drills you don't actually trade at all. You just sit and watch the market. Jigsaw has one of the first drills that they highlight is you sitting there watching the tape, the dome, and some of their fancy tools, and that's all you do is just sit there watching it.
Yeah, that ain't gonna work for us ADD people.
I know, right? I could give it like 5 minutes and then I'd have to call timeout. Like I couldn't just sit there staring at it for very long because I would get, like, ooh, squirrel, and then I'd forget all about the drill. So I had to do it in little nuggets of time, but it did help, right? It is a helpful tool. So you can work on any part of your trading. Just have to figure out which part do you want to work on, and then how can I put those pieces together to be able to do that. Notice we're finally moving. We were in a tight range, and trying to do a drill in that tight range wasn't really working. Now we're actually going somewhere. So if I was wanting to time this drill again, this would be a better time to do it when we're actually moving, right? So, I use order flow with this drill because it's this flow of orders that is moving price. And of course, we need price moving. Then you just time it to run the play, right? Get a little wick up there like that. Nope, too soon. Like that, too soon, too soon, too soon, too soon. You get the idea. What time frame? This is 500 tick. I just made it small so that we had something to run. Otherwise, you could be waiting for 10, 15, 20 minutes by the time you finally had a chance to run it. If you're on 500, for an example, and you're still waiting for 10 minutes, make it smaller. Keep making it smaller until you have multiple opportunities to run the drill, right? That's the whole idea. You don't want to wait. You want a good 150 to 200 opportunities every time you run the drill. So you don't want to have to wait around for 10 minutes before you get to run it again. Which, by the way, this drill is crazy hard to do. And it's frustrating. It's just really, really frustrating. You can run the drill on the weekend if you have historic data as a part of your package, right? So it's called market replay. You can turn on the market replay and it'll pick some random day, or maybe you pick a random day. I don't know. I've
You
never.
do.
Oh, you do? Perfect.
Yeah, you select it. I mean, I think it's like $40 a month on Tradeovate. It's good. It's an investment, especially in the beginning while you're learning. Um, but now Book Map, you set it up to record the session, and it records the session, and then you can play it back. So Book Map does not have any way to do a replay unless you previously recorded it. But with Jigsaw, you just tie into your replay subscription on Tradeovate.
There you go. So that's how you could do it on the weekend. I do have clients that have that replay, and every one of them that's paid for it said it was worth it and that they got a lot out of it. I have never had it, so I don't know, but they said it ran smoothly. It was really good. It was not like Thinkorswim's sorry trash of a market replay.
Oh, don't bring that up. God.
It's horrible, isn't it?
I mean, yeah, it's horrible. I mean, it's even worse since Schwab took it over.
That's bad.
I've tried to use it a number of times, and you can't use it on the ES because they don't keep replay for the ES. So they did with TD Ameritrade, but Schwab doesn't.
I really think Schwab doesn't want our business.
I'm not sure what their thinking is. I know I've moved all my options away from them. And the only thing I've got with Schwab right now are my long-term holdings. And because that's not something I need to decide in the heat of the moment. But their software has gotten so sluggish. I've talked about this before, but I thought it was my PC for a long time. And then I got a virtual private server up in New York to host it, and it was just as bad there. And I said, well, okay.
They
So,
keep deleting all of my saved chart settings up here at the top. Every
yeah,
morning I come in now and they're gone, and I have to rebuild them every day.
no kidding.
Mine's the same way, Signet. They
Me
keep doing the same thing.
too. Yeah.
I'm so frustrated with them right now. But here's the good news, guys. And I don't have anything to validate this, but I feel it in my bones. TradingView linked with Tasty Trade last year, and our access to Tradeovate's options data is increasing. And I firmly believe that by the end of the year, maybe into next year, TradingView is going to be the dominant options analysis platform, which is going to be fantastic. Because right now, every month, new indicators are being built that use options data on Tradeovate.
No, that would be nice.
Right. And even the ones that we have so far, I found one, you have to be a paid member to use it, and I'm not. So I've only got the free version, but even the free version is amazing. And with it being free, you don't get to choose any market out there. They only give you like Apple, Microsoft, maybe Tesla, something like that, right? You don't get to choose very many. But the ones that you have access to, yeah, they're amazing.
Signet, you can practice the same thing that you're talking about doing on demand in Schwab.
Yeah, that's what we're saying though. It is so horrifically slow, bad, clunky. Um, you can't hardly put an indicator or anything. I mean, you can draw lines and stuff, but God help you if you try to put two or three charts up at the same time. It'll just sit there and buffer, and one chart will update while the other sits there stagnant. And it's on demand. It's terrible.
Yeah,
With
it's really bad.
now Trading View, of course, does have a replay, but it's not. You don't get to watch the tug of war with the candles or anything. It's more a matter of you click through one candle after another. But
Actually, it'll keep going. If you unless you stop it, it'll keep putting up the candles.
okay.
Yep.
So I mean, there are ways. I presume you probably have to have a subscription to TradingView to do replay. I don't know about that. I do have a subscription to TradingView, but to be honest, I don't ever use it anymore. Me personally.
I'll show you guys how I use that replay to take pictures of my trades so that after the trade is done, you can rewind to where it started and take your picture so that you can do this is what it looked like when I got in. This is what it looked like along the way. And this is what it looked like when I got out. That's really helpful. I like being able to do that. So I'm looking through my saved charts. I know I've got a chart that has the system that I'm looking for, and it has the options contract data on the chart. It shows you the call wall, the put wall, the implied volatility for the various strikes, and where all the institutions are at, like the open interest and stuff. I just have to find the chart. Since it's not a paid indicator and I don't have access to all the goodies in it, I don't go to it very often. So now I'm hunting for it. But I remember when I found it, I thought this is the beginning of the future because it's amazing. I will find the darn thing.
Now, here's a question for you, Signet. With Schwab, the one thing that I really care for is that you can go to the cogwheel of the stock or option that you're about to put on, and you can actually tell it the underlying price you wanted to enter. And I noticed that Tasty Trade didn't have that feature unless they've included it within the last 5 years or so, but they didn't have that feature. Does TradewithKev have that?
You mean for like a stock position or?
Options? Like I can go to the underline and you can tell it what price you want to get in on.
I don't know that one.
No, I don't think
You can't-
TradewithKev allows you to do that. First, TradewithKev only going to mostly give you the futures, not equities.
It's futures. Okay.
Yeah.
Yeah, TradewithKev. What's weird about TradewithKev is they show you the options chain, but you can't trade the full thing. And I've asked them about it before. I'm like, why do you put this up here if we can't use it? Because I'd love to get a discount. Dang, I got out too early on that short. Anyway, but I still made $100, so I'm not going to complain. But if you're gonna, me personally, I use Ninja Trader as my platform for TradewithKev because it's a professional platform that hooks into the same TradewithKev server. But it doesn't. I don't know if it has a replay. Let me look.
On my screen right now is that indicator that I was trying to find, and I'm showing Apple, and you can see this indicator is smart enough to realize what time frame I'm on, and it will look back to options that it think is relevant to my time frame. 49 days to expiration on a daily chart. If I jump to a weekly, give it a moment, it'll update. Now it's looking back 665 days because I went to a weekly chart. It's looking at options all the way out to 2028, right? Like, this is a smart system. Highest positive net GEX call resistance gamma wall right there. And if I go to a smaller time frame, give it a moment, it'll update. And now I'm running on the 49 days to expiration, highest negative GEX put support, breakdown levels. Like, I love this. And this is the free one, right? It is so cool.
So,
The
so it
reason
tells.
the reason it's free is because I don't get to choose the product. Let's bring up their support page and we'll see what it's all about. All right. So up about this is right here. This is what it's called. If you guys want to go look at it yourself, GEX Profile Light, real auto updated gamma exposure levels. You know, in the morning I post that image and it has call wall, put wall, you know, the zero gamma level, but that's only for the S&P, right? And then I share an indicator every day, and it has lines in it that you can import onto your charts, but they're not live and updating in real time. They are the overnight levels that we all use the next day. This will constantly update what's happening to the options throughout the day. The free one doesn't update very fast. I think there's a limit to how many times a day. There it is, 5 times a day. The free one is, you know, only going to give you so much. But the live version allows you to do so much more. You can use it for 0-day stuff, multi-leg strategies. You know, you can pick different markets. I think you can force auto update when you're on a paid subscription. It does a lot. It's a really smart system. And this is why I say I think there's going to be a lot more coming, right?
So you can basically find out before say 5 minutes before the close, if somebody comes in there and sneaks about 5 million puts or calls because they know something when the market closes that the stock is going to either tank or climb.
Yeah.
Wow.
But now that you ask a question like that, in the Discord, we have the alerts channels. What you're describing would be akin to like a put sweep or a call sweep, and should trigger the bots anyways, right? Like it should land somewhere in here. Not guaranteed, you know, but something that big, it should land in here.
Because it's been happening a lot, you know, when Trump does a call out, oh, we've got the treaty or whatever he says that we're going to end this soon. Somebody in there, I was looking at one of the other apps, and they would say somebody knows something that it's like insider trading, because they'll put on a put or a call right before the close, like 5 million puts or calls.
Oh
and
yeah.
somebody got rich. But what I'm trying to say is this doesn't seem to let you know real time, right?
Right.
Okay.
There are services like
Cheddar flow, black box
Cheddar
stock.
flow, black box stocks, unusual whales that have what's called an unusual option activity, UOA alert.
Mm-hmm.
And when they see just a massive amount of options happen out of the blue, they will trigger an alert.
Mm-hmm.
And there is a trading strategy based on unusual option activities or alerts. There's very much, because the idea is, because I was with black box stocks for a while, nice people, real good people there, but I mean, years ago, very immature member base, but the moderators are very good. But anyway, again, years ago, things may have changed. But this was one of their claim to fames, and the idea is that all of a sudden Citgo gets a massive amount of options trades that trigger off for July, and it's a call, blah 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 strike, that expire in July. And the concept was or is that somebody knows something at the corporate level that we don't know, and they're putting on this big trade, and so we would follow them on that trade in the hopes that they know what they're doing, because they have access to a huge brain bank of people that says, we really need to do this, and there is a strategy to it. If you go over to Unusual Whales, you'll see they run a daily podcast on YouTube where they're sitting down there just watching for this kind of thing to happen. Now, the downside to it, and the reason it drove me crazy, was, I'm not saying it doesn't work, not saying that at all, but it drove me absolutely insane, because we don't know why this trade is put on. We don't know who put on this trade. We just know that someone put on a trade with a lot of money. And we're saying, are we going to follow this completely unknown person? There's our ADR low, by the way, on the ES. But are we going to blindly follow somebody into this trade? And you'll have so many trades and so much money tied up, because you can have 30, 40, 50 option trades on at a time, because some may expire next week, but some may expire in September. And so you end up tying up a massive amount of capital in a lot of cases to do this. And of course, you still need to do your own due diligence, blah, blah, blah. So there is a strategy to it. A lot of people do well with it, fine. But it is really brain intense, capital intense, appeals to a certain group of people. And you just kind of have to, are you the kind of person that can have 50 options tied up for the next 6 months to a year? You come in, you check them every day and see what's going on, and blah, that kind of thing.
One thing that a lot of people miss who are new to options is those kind of alert services. If you see an alert that says Lowe's is getting hit on the call side at, the 2:30 strike for May 15th, and they go in and they look at it and they're like, oh damn, $1,100. No, that's too expensive. I'm gonna buy this one, and they'll buy something else thinking, well, I'm getting long and they're getting long, so my trade should work as good as their trade, and it doesn't. Why not? Well, if that one strike is getting hit over and over and over again, really hard, really fast, big orders, nonstop, just smashing it, that one contract will expand in value faster than all of its peers. Sure, the others are going to get dragged along for the ride, but they won't do as good. And that's an overlooked piece that a lot of people fail to recognize. Plus, this whole move, in and out, done and dusted. It's not a swing trade. And then, of course, newer traders, they're not quite grasping what's thinking. They're, oh, well, I'm going to hang on to it for a while because I only have, 3 PDTs. I don't want to burn one on this. So they keep it. And then what? They got the wrong strike, maybe the wrong expiration. They held on to it when everybody else got out. And then they get beat down, right? They lose and they don't understand. Why am I losing all the time? Everybody else is trading these. It works just fine.
Because you got to remember, too, if you go long in an option, a call or a put, you're not supposed to hold it to closing. You're not supposed to hold it to closing. You're supposed to hold it either to a certain percentage gain, 50%, let's say, or halfway through the trade life. Because if you don't understand theta, you don't understand options. And you've got to absolutely understand theta to understand options. But the point being is that so again, there's more science. I've said over and over and over before, price action is checkers, options is 3D chess. It can be, depending on how complex you want to do it. But like Signet was saying, here's a trade that's at 12, it's going to cost $1,200 per leg to get into it. You're like, I can't afford that. And then people start saying, well, maybe I can do a credit spread, a debit spread, or such and such. You're not doing the same trade that they did, and they put a lot of time and research into why they took the trade they took. And so, yeah, again, it's a valid strategy, but it's a certain personality of person you have to be to do that strategy. Nothing wrong with it, just different.
Yeah, you definitely want to define all of your rules before you start trading that style. That way, if it's too expensive, too far out in time, all kinds of criteria that you can use, too close to earnings, an earnings trade, a dividend, anything that you think might impact that trade, write out a set of rules. What you can trade, what you can't trade, your price limits. And that way, when it pops up, you don't have a lot of time to kind of kick the tires and decide if you want it. If you're going to play them, you need to play them when they show. So you need your rules already laid out on, is this something that I'm willing to trade or not? There was a question about, is there a delay on the Discord? There's not supposed to be, but these bots, take it with a grain of salt, right? Some of these bots are free. I don't think it's these. There was other ones that we had. And so it wouldn't give you all of the alerts. It would only give you some of the alerts. They weren't holding them back. They just wasn't giving you all of them. I would recommend you use these channels to see what's out there and kind of get a feel for it. But if you want to start trading in this way, you want to pay for a service that is giving you these trades constantly. That way you're actually getting the real deal and not just the free stuff that lands in here. When it does come to the free stuff, here's one thing that I love about them, and that's repeat trade activity. We've got 2 here from MU, so I'll use these and point this out. 270 strike on the MU on the put side, same expiration? Nope. Okay, there's our failure right there. They're different expirations. You want all of it to be exactly the same expiration, same strike, same symbol, everything same. And if you're watching it and it hits and then hits again and again and again and again and again and again, oh, that's the sweet one, right? You jump on that and you ride that sucker. But
Challenge it.
one
Sorry.
yeah, one random one out of the blue, I'm not really all that excited about one random.
Now, the challenge, like I say, Signet brings up a couple good things. There's what are called sweep orders, and then the other type was
Blocks. Yep.
block orders. A sweep order says that they don't care which exchange fills it. Whether it, remember, there's multiple market makers. And an institution says, I don't care who fills this order. I want 200 contracts. And so they're not going with any one market maker. They're just saying, just get me 200 contracts, no matter which market maker you get it. And that indicates an incredible amount of urgency. And then there are block orders, which is where they just simply say, when a market maker, single market maker, can fill this for this price, and only at this price will I take the trade. And that's called a block order. Now, the problem that you run into is when you start seeing what Signet was just talking about, where it says, oh, look at this contract, it's getting hammered. They're hitting it again and again and again and again. Well, if you're going long, you want to get in at the cheapest price you can, right? So let's say that by the time they start hitting that order, that option was $1. Well, then they hit it again. Well, it's $1.05. Then it's $1.10. They're still hitting it. Now it's $1.15. They're still hitting it. By the time you find it, get alerted to it, well, it's $1.50. And you've already, if you get in there, you are way off base, because the original order started at $1, and now you've come in paying 50% more than whoever it is that started this. Now, that's not to say that you can't still make money, and it may go to $2, $2.50, $5, or whatever. But you have to realize that if you don't have a really good professional service, like Unusual Options, Black Box Stocks, and I've never used Cheddar, so I don't know anything about them myself, but if you don't have a really good, fast alerting service, and you're not skilled enough, you can still take the trade, but you're at a huge disadvantage and a greater chance for taking a loss, because the original people may just want 50%. If it started at $1 and it hits $1.50, well, they start dumping, and it happened within 5 minutes, even though the trade is triggered for September. And you get in there because it's $1.50, but everybody's still hitting it. I used to joke about slap that ass. And so, yeah, you've got to be good with it. So, it's fine, do it on paper until you are good with it, but it's a completely different type of trading strategy, personality, and everything. Nothing wrong with it. People trade Ichimoku. Me and Signet joke about that a lot. At least I do. And they do fine with that too. But anyway, different type of personality. I somehow shut up with that.
Yeah, but Signet, thank you. Signet, the what you were showing us, that tool that you were showing us on TradingView, if you pay for the real version, it'll give you real time information.
I was reading, and it didn't have all the answers that you're looking for. It didn't.
Mm-hmm.
So what I would recommend is you reach out to them and you get all those missing answers.
Okay.
Yeah. I had expected there to be more information, and maybe I had gone to this website before and I read, but I don't remember all of I could have swore you could force an update whenever you want if you were a paid member, and I didn't see that in the description when I was reading it today. So now I'm like, did I misremember? Did they change it? Shoot, I don't know. So I would definitely recommend checking out their website and getting clarity, because if they want your service, they'll answer your question.
Yeah, but to the sometime back, a couple of months ago, you showed us how to create an unusual options scanner or filter, and you're saying how that's comparable to any one of these services. So, because I set it up that way, and it'll alert me when something it looks unusual. Wouldn't you say that pretty much can do the same thing, pretty much?
There's a lot of limitations on what you can do with your broker. Your broker can highlight large volume in the options chain, certainly. But a lot of these sites will tell you what the premium is and whether or not they're hitting at the ask and above, at the bid and below, and then flag those repeat signals too. You can do a lot of it yourself, but how many charts can you watch, right? Like if I'm watching the Qs, I can see if they come in hammering on the Qs, but what if they're hitting lows? I'm not watching lows. I promise I'm not watching lows, right? Or Boeing or some name that I'm not looking at. So in theory, yeah, you could do it, even with the scanner hunting for it for you. But their tools are designed and people pay for them because everything that is relevant to what you need is pre-packaged, ready to go. And you pay for convenience.
Okay. Thank you.
Yep. It's just like the earnings. I've always said people that want to trade earnings should get an account at like Earnings Whisperer or Whisper Number, one of those two, since their tool is specifically designed for earnings trades. And you can do a lot of earnings work on your own. They'll just be able to help you make it a lot easier. So when you have a niche or a special kind of trade, unusual options, earnings, whatever it is, pay for the service so that you can make more money. The money will pay for itself, right? The service is paid for by the trades you take, and then the extra is yours to pocket. And that's why a lot of us who are successful at trading, we buy those kind of services because it just saves us time, effort, and helps us make more money. The question about best, Sophie, that's a good question. Depends on your sophistication level. If you are really sophisticated, you could use something like black box stocks because it allows you to change every nuanced piece of every setting. It is really awesome. If you know what to adjust and what you want it to be adjusted to, then by all means, that's what you would want because it can be tuned in like a humming machine. But if you're, say, new to unusual options activity and you really don't know what the settings should be, and you don't want a massive confusing platform with all these buttons and knobs and dials, maybe something like Cheddar Flow. It is a preset scanner. You don't change anything. You just pay for it, turn it on, and the trades get flooding into there, and that's it, completely set up and ready to go. Some people like that because you don't have to change a thing, and then others don't like it because they want to have the ability to go in and tweak the knobs. So best would be what suits your style and your level of understanding. There are a lot of them out there, and most of them will give you a free trial. This is really important. Don't use all of them at once. Pick one and use it. And even if it's not free, most of them will give you a discounted trial. So they'll, instead of $50, they might make you pay 10 or 12. Just use it, use one at a time and take your time. Yeah, they're both live. Cheddar Flow and Black Box and Whale Stream, all of them are using as close to real time as they all have, right? If they aren't, like there are some that do not use live, they'll tell you ahead of time, or you can always ask. Like for an example, this site right here. This is Quick Options. I love these guys. Us at the Bullish Bears, we helped build this site. They were not using live options data. And when we talked to them about, are you going to use live data? The answer was probably not, because they were going to have to pay an exorbitant amount of money to have that live data. And then on the other side of that, they would have to charge people a lot of money to pay for that data. So they were like, for the kind of things that we're hunting for and the kind of clients that we want, we don't think we need the live data. We're not going to offer that. So there was a 10-minute delay or a 15-minute delay, but it wasn't like they were hiding it, you know? And so it's a good question to ask about real time. Most of them that are expensive, they're the real time ones. So if you're paying 50 a month or you're paying 100 a month, you're paying for the live data. Spot Gamma is one of those sites that allow you to analyze as you go, right? So these guys aren't just UOA, they're deep into all the different activity. And I like them because you can tweak the settings and dig down into individual names, and it's awesome, right? Because it's not just UOA. Like the quick one is not just UOA. And that's really great. They're about as live as you can get, but they are not cheap.
Which one did you say?
Spot Gamma?
Spot Gamma. Okay, thank you.
Yeah. Which I'm getting logged into them. They logged me out for some reason. So I'll bring up, when you're looking at, there's a lot of option sites out there. You want to find one that suits your needs. Cheddar Flow is about unusual options. Black box stocks, whale stream, those are all unusual options. You bring up something like Spot Gamma, you'll get some UOA in this, but it's also dealer positioning, dealer options, and then the ability to analyze options on a stock, whether or not it's getting activity or not. So this is like a full service, one-stop shopping center for options data and analysis, from the dealers to the fund managers to the retail traders. And of course, it's expensive because you're getting real-time data and all of these specialized tools. Or TradewithKev, that has a lot of UOA built into it, but it also has a section where you can analyze a particular stock and dig deeper into its options data. So there's a lot of choices, I guess, is the takeaway. So many styles to choose from, and you would want to pick something that either you can learn or that suits your needs. If you just need trade signals, Cheddar Flow is really great because it's preset and ready to go. Or Whale Stream is another one. It's just preset if you want it preset, and you don't have to do anything. But you can't deep dive on their platforms. If you have no intentions of deep diving in there, then great, you don't need it. You just get those and you're good. This is TradewithKev. If I go to charts, it'll show me the market simple, like Amazon right there, shows me dealer positioning. And if I want to, I can add price levels like whale targets or GEX, 0-day GEX, sweeps, blocks, dark pools. I can just choose what I want. And that's just from the charting page. I got the earnings here on the side. And if I wanted to, I could dig deeper into various parts of Amazon if I so choose. So this is a great service, right? If you want to dig. A place like Cheddar Flow, they're just going to show you unusual activity, and that's it. There are some sites out there that try to get the information as quickly as they can to the public, right? Like like Spot Gamma. If you're watching this run in real time, you see trades. Let me go to the tape here. You'll watch those trades come in real time. And if I adjust the settings, then I'd watch them come in on size. It'll ignore the smaller stuff, show me the bigger stuff, and make sure that I'm only getting what I want to see. If you don't adjust it, you'll get everything. All right. So here's raw, unfiltered and it's just coming in. So all I'd have to do is starting adjusting it right there. Live flow, and they're not kidding because it's expensive. But you're right. It's really frustrating when you're looking at Twitter or something and somebody's like, oh, look at this 15,000 contract trade that came in and we spotted it and traded it and made $1 million. And we did it all before 10 o'clock. Now we're drinking coffee. Sucks to be you. And then you go look and, maybe it was real, maybe not, but there was no way that they could have caught it. And they shared it after the fact. And it was like, you're not helpful, Joe. Not you, but whoever it was that posted it, they didn't help you. All they did is rubbed it in your nose that you missed a trade. I don't like those places. They're frustrating. I want the ones that are saying something like, hey, we've seen 4 trades come in and the stock's moving in this direction, and oh, here come another trade. Now we're going to get into it. They're telling you what's happening in real time, keeping you informed so that you can see it as it's happening. Below bid and above the ask are 2 really important things to check when you're looking at UOA, because that shows the aggression of the trade, right? Quote, volume sucks because any resting order will become volume when we pass through it. But an aggressive trade shows that they hit at the ask and above because they really wanted to buy it, or at the bid and below because they really wanted to sell it. And they were willing to pay up beyond the current price to jump to the front of the line and get that order now. And when I see that, that's really aggressive. When I see it happening again and again and again in the same name, same expiration, oh, that really gets my attention. There is a lot of data on UOA out there. The size of the trades can be informative depending on what service you use. Let me dig up some of these. What's interesting is depending on the size, it might be a dark pool from the previous day's trading that got sent around the world and has now come back, and it's being shown on the tape. So you see it, you see volume come in and you're like, oh, that was crazy volume. And then you look and the price is way off. It was yesterday's price. It was yesterday's trade. They just ran it around the world. Here's my dark pool Discord. These values, dark pool orders. So check it out. If the share size ends in 501 through 504, then that was a dark pool stock shares, stock size, right? Here's an example. A trade comes in and it's 501,565. That 501 in the front there, it's one of the signature orders. Or on the Qs, 410 through 413, IWM 251 and 252, or DIA 250, 251. Now, why those sizes? I have no idea. But this service in their educational material highlighted that there are, quote, signature sizes out there. And just seeing the size come through on the tape, you know that it's a dark pool without even checking to see if it was a dark pool. You're accurate, Joe. The flow by itself doesn't give us very much at all. And yet there are traders out there that will instinctively take that flow and make assumptions. Sometimes their assumptions are right, and sometimes they're just way off base, right? Because the flow itself doesn't tell us anything. So for me, I'm a little more picky. Let's look at Thinkorswim because Thinkorswim is free. Right? I can come into Thinkorswim and I bring up today's statistics and I want to know about flow. How was the flow on the Qs. I can see that today's trading activity in the options is 200% above the average trade volume. I know that because the sizzle showed me. 1.0 means we are at the 5-day average. 2.0 means that we're above the 5-day average by 100%. And 3.0 means that we are 200% above the 5-day average trading volume. So I have that. That's a good start. Now I can see where was that volume? At the bid, at the ask, above the bid, above the ask. Where were we at? So I can come in and say, okay, well, here's the bid and below. There's my BB. 46% of the options traded on the Qs was at the bid and below. Sell side, aggressive. That's the call side. They were selling calls aggressively. 46% of all of the calls traded today was at the bid and below. Now, those are just calls, but where was those calls? I can come down here. They were out of the money calls. Between 0 and 20 delta, calls were traded on the sell side. They were selling out of the money calls. Not bad for a free platform, right? That gets me looking in the right direction. Is it outsized volume? Yes. Where was that volume? 46% of it was sell side calls between 0 and 20 delta, out of the money. Were they running it in a pair on the put side? Not all that much, but here's the greatest amount of puts, which was at the ask and above, 40%. And they did that sporadically. We can see no real dominance here, right? Not like this 44 that really stood out. On the puts, it's like, well, there's 26, there's 31. So it's not that good, right? On the put side, not really all that helpful. But if it was, we would have seen it, right? So if they had really big, unusual put activity, that would have showed up, so that would have been helpful. When I bring up on Thinkorswim, I'm looking for really big standout numbers. And if I don't see it, I just dismiss it. Because flow by itself, just like you said, not helpful, probably the wrong direction. Especially if it comes to the indexes.
Segment.
Yeah.
We change back to that. Can you go back to that real quick? Explain how you reason that they were selling
At the bid and below. Right here.
Sorry, I was talking about the number down below, between the 0 and 20. Sorry.
Once we knew that we were selling, we wanted to know where they were selling. So I knew they were selling because they were trading at the bid and below, and then I come down to the bottom part to know where they were selling. Right? So this is what told me that they was selling, and this is what told me where they were selling. If they were buying, we would have seen this number greater. And believe me, there's not much difference between a 40 and a 46, but it does stand out. 46 is greater than 40. They did more selling than buying on the call side. It would have been better if this number was like 20 and then this one was 12 and this one was everything else, right? That would have been great. But even at 46, it's still showing us that they were doing more selling of those calls than buying of those calls. At the bid and below, selling. Yeah, this is Thinkorswim. The problem with this, even knowing this much, they were selling, but was they selling to open or were they selling to close? See, you still don't know everything about the trade, right? And that, I mean, that it sucks, but you can dig deeper once you have that much information, right? Because now we can go into the time and sales and look even deeper. So clear the filters, and maybe Thinkorswim, you can do it, baby. Come on. Don't quit on me now, you little gremlin. We'll open up the top 10 trades. And if we wanted to, we could just put it on puts so that, it's not so blurry. And with that kind of trading activity, it was probably in the front. I'm going to adjust the quantity to at least, say, 10. And that we're looking at the biggest ones anyways, but at least 10 would stop us from seeing all those ones and twos. We can adjust the quantity right there. And now we can start looking for those big sellers, right? At the ask and above, or at the bid and below. The red is the sellers. So here's the trade price and there's the market price. Where were they hitting at the bid and below? See, it takes time, but we can find it. We just have to hunt for it. We're looking for this number to be bigger than that number, or in this case, smaller, at the bid and below. So 1289, we'd want to see 1288 or lower so that we could see that they're hitting at the bid and below. If it was at the ask and above, then the number we would be looking for would be bigger than that number. As for having it on Fidelity, I'm sitting here trying to remember if I've ever even seen time and sales of options on Fidelity, and I can't remember ever seeing that. I'm not saying they don't have it, especially on their trade platform, because I never use their trade platform. I trade on Fidelity on the website, and so I don't know. It's possible. Right, it would, and that's why having a service to one of those places makes up for it, right? It really does. But it's a specific kind of trading. Short term, short duration, you're in and out today. They're not swings, and you are not aiming for the fences. I know they love to post those Twitter feeds where they're like, we made 9,000%, baby. You know what I mean? I know that that's popular, but it's not the norm. It's the exception. And even you guys know Jeremy. You've seen his 1 penny trade go up 1,600%, and he made $1.60 on it, right? It went from like 1 penny to $1.60.
I know.
Hey, he got him,
It's the craziest thing you've ever seen.
Yep. So, if you want to trade that style, it is a viable trading style, but it is frustrating and difficult, and it's not free because you need to have a really good website.
Well, and again, it depends on the type of trader you are as well. Are you the kind of person that really enjoys going down the rabbit hole? Jeremy, like in Jeremy's case, a lot of his stuff is simply done by technical analysis kind of stuff, but a lot of people will just research a company to death and look for it, and they'll follow the news and this, that, and the other, looking for that perfect entry. And again, it's a particular type of trading style, just like trading earnings that Signal was talking about earlier. But yeah, they are sickening when you see his one penny option cash out at $1.26. You're like, yeah, you're just disgusting, But
Also, when it comes to best, you want the one that suits your needs the best, right? I have Spot Gamma because it has a lot of dealer positioning in it. I have Tradie Ticks because it has a lot of the automation, like we were talking about with like Cheddar Flow and that stuff. So what suits you best is going to be the one that will be the best for you. They all are great.
Yeah, a lot of people have those same too. That's the reason I was asking you. Because it seems like you have several other ones, and it just seems like these two are probably the most popular: Spot Gamma and Tradie Ticks.
They
out of
are.
all of the other ones.
And to be fair, I don't pay for either one of them.
Well, we don't have your kind of role.
Well, you know what I like. If I had to pay for them, I probably wouldn't have them because I don't need them. So I wouldn't pay for them. But since I have them, I use the hell out of them. But dealer positioning is going to really lean you into the indices, and it's going to miss a lot of the Apple, Amazon, Tesla stuff. And then the other one, the trading ticks, it's just all done for you, and it's kind of mindless. I don't even have to think about it. I just come over here and turn it on. I'm like, oh yeah, check it out, get in flow, cool, and no effort on my part. So I would say lean into what really suits your needs. And if you just want trade triggers, something like Cheddar Flow or Whale Stream is perfect because it's preset, ready to go. You pay and you have access, and there's nothing to adjust. It just runs. Awesome. There was a question about, is there a trade that we could take going into the close? And last Friday, we bought some far out of the money calls in case we had a spiked up Monday. Funny enough, we had a spiked up Monday, but it happened in the pre-market and it unwound a lot before the bell rang. And then two, it didn't stick. And so my calls were trash, toast. They didn't make any money. But the idea would be the same. We've had a pretty good sell-off on the week, especially yesterday and today combined. If I'm shopping around today for a trade in the next week, I would be looking for some calls simply because A, it's a red day. I don't want puts. B, we've fallen a lot in the last 2 days. I don't want puts. 3, if I'm looking for a shock and all Monday, it would be opposite direction of the direction we're currently moving. So I would be looking for some cheap out of the money calls, and I would do it on something that is at a price range that I don't care, right? Like a cup of coffee cost where you look at it and giggle and say, well, I don't like losing, but I don't care, whatever.
You know, tight spread on the indexes, the ES, MES, that way you can trade in that pre-market if the move happens there. But the challenge, of course, is liquidity and getting out of the trade. A lot of times it's real easy to get into the trade.
And options on the futures are awesome, by the way. But multi-leg in the options on futures, really hard to pull off.
Yeah.
The good thing is on the futures, they're cheap enough you probably don't need to, right? Like you don't need a multi-leg probably to run a call or a put on the MES or the ES. Stay away from the NASDAQ options.
There's no volume
in futures. Right. Absolutely no volume.
No, I've done credit spreads on the futures options simply because I saw a good setup up in the SPX. The regular trading hours weren't open. I thought, well, I'll do it on the ES. And in a lot of cases, you run into, there's just two things generally you need to be aware of. I know Sigma knows this, of course, but one is you don't have nowhere near the volume that you do on the index futures, the future options that you do on like the SPX or whatever. Number two, well, number two, I forgot already. Anyway, you don't have the volume, and so that a lot of times that means it's easy to get into a trade, but it can be hard to get out of a trade, and that can matter. Oh, and the other thing is, depending on your broker, your commissions may be higher when you're doing options on the futures. But you say, well, it's $5 a leg versus $6 a leg. Well, if you're doing a $200 position, you hope to make $200 off this trade. Should we really fuss about the difference between $5, that $1 difference between one broker versus another? But if you're doing $20 profit targets, then yeah, that may become more of an issue. But yeah, I mean, it's there. You can start a 0-day trade at 6 p.m. Sunday night, you know, and I wouldn't, but you could. It costs too much, and there's too much that can happen between then and regular trading hours. But
when it comes to options on the futures, your point size is the options value. You can see that this option is $41, and yet my risk is $205. I took $41, multiplied it by 5 because I'm on the MES, and that gave me $205. That's my risk. If we were on the ES, I would have taken 41 times 50, and that would be my real risk, right? So these options are different than equity options. Take the tick size and multiply it by whatever number you see there. Tasty does it for me. But if you're on, say, Thinkorswim or some other broker, they might not do that math, and you'll have to do it to know what your real risk is.
definite pros and cons depending on the broker. I'm still getting used to Tasty, but I've got most everything worked out pretty well. But yeah, I'm glad you pointed that out there. So, you know, most equity options, SPY, Tesla, stuff like that, you're controlling 100 shares. And when you're talking about the futures options, you're controlling whatever a handle is. So, or a point. So a point on the ES is $50. So you're controlling 50 units on the option, whereas the NASDAQ point is $20, and so you're controlling 20 units on the option. And so yeah.
I bought calls on the 50 strike for XLF. I figure if we do have an up Monday, then financials are going to rise, as well as, you know, SPY, Qs, blah, blah, blah. I picked a cheap market. It's less than $50. And then I chose a cheap call, 5 pennies. And that's what I filled for next Friday's expiration. That's my approach to situations like this, right? Does this trade have a high probability? Absolutely not. But I can't get a cup of coffee for $5. So I'm not going to cry if this trade doesn't work.
Are you a Starbucks person? Really?
Yes. But I don't live in a town that has Starbucks, so I get one like every other month, basically when I go get my hair cut.
I'm sorry. I'm one of those people that I'm an old fart who's like, $5 for a cup of coffee. What's the matter with you? I used to pay a quarter for them. But anyway.
There's a coffee shop near me. It's not Starbucks, but it's a coffee shop. And man, they make the best mochas in the summertime. Oh man, it's so good. Mocha frappe, baby. I learned how to make them at home. You can buy the syrups and everything. It's so awesome. Just watch your waistline, because man,
I got one of these machines that makes the frappies or whatever for my wife, and it's got an ice grinder feature on part of the function. Well, it doesn't give you any heads up that it's about to kick in, so it's doing something. All of a sudden, and it just starts screaming. Well, it scares the hell out of everybody in the house when it goes off. Cats go flying, me and Karen come flying out of the chair and everything like that. I'm like, what the? You know, and it's worse because you know it's coming. That's the worst part about it. You know it's coming.
That's wild. We were just looking at an ice maker that makes the little pellets, like the ice you can get from. Oh.
Yeah. I just bought one for a friend of mine that they make what they call ice bullets.
Yeah.
And you can get them for $100.
My wife likes that because she likes to eat ice.
Okay.
She's one of those people. And so she likes it. I'm not a fan myself, but to each their own. I did buy these steel balls that you're supposed to put in the freezer and then you drop them in your drink instead of using ice, you know, for like your bourbon.
Yeah.
If you like bourbon on the rocks. So you take these titanium or steel or whatever they are, put them in the freezer, and then you pull them out and drop them in your drink. But they take up such mass that, you know, you can get a rock glass out, drop this ball in there that's about the size of a baseball, weighs about 4 pounds, and then there's really no room in there in the bourbon for anything more than like a shot.
That's what you're
So
supposed to take anyway, right? But I suppose you could get a series of marble-sized ones. They're not going to be as cold, but that way you'd have a little more control over it. Just be careful you don't break the bottom of your glass.
yeah, that was the other part. If you get the smaller ones, they roll around in the glass and they hit the side really hard. But if you get the big one, it's almost as big around as the rock glass that you put it in, and then it doesn't really have any room to roll around and smack the sides. But it makes for a very heavy drink, and just like, what did I pick up? Oh, my bourbon glass. Yeah, there's this 4-pound ball in it. It was a gimmick. I shouldn't have got it, but I couldn't. I seen it and I was like, oh, why not?
Market on close imbalance. S&P minus 554 million. NASDAQ minus 841 million. Mag 7 minus 372 million. Which is interesting. Remember that the Mag 7 is part of the S&P and the NASDAQ. So by and large, of the S&P anyway, considering the Mag 7 controls 40% of the S&P.
You reminded me of something that I haven't shown people in quite a while. There's a website out there called Market Chameleon, and it's pretty awesome. These guys record the market on close every day, and it shows you the trade imbalance every day. It's absolutely amazing. You can get the free version, which has, you know, a limited capacity of information, and or you can get the full version. For years, every day, my wife would come in and copy all of this information off of their website, and she would stick it in a spreadsheet and manually cut out all of the extraneous data. And then we charted it and marked it up for years. That spreadsheet got so big, it was just massive. If we had got the paid version, I could have just, you know, sorted it all out ahead of time and then downloaded it. But that's all we were using it for. And she said, oh, I'll do it. It got to the point where she was just dreading life every day. She's like, oh, that damn market on close. I have to go in and get that data. We finally quit doing it. But for a couple of years, she was diligent every day coming in and getting it. You can see it goes back for a couple of days. If you have a paid version, you can look back even farther. Today's isn't updated yet. It won't update for probably 15 minutes, but you can see the companies that traded, whether they were on the buy side or the sell side, how big it was, notional value and volume size. And it's really good information. Plus, you do have the trade balance across the top, which is pretty handy. This is called Market Chameleon. It is the stock report order imbalance, if you want to go check it out. I'm not logged in, so you should be able to see exactly what I'm seeing without paying for anything. Now, they do filter it. This isn't the raw imbalance. It has to be at least 50,000 shares or greater, or they won't record it. Right. And the reason they do that is because you and I can put in a market on close order, and we're probably not going to trade at a size big enough for them to even worry about. So they don't want everybody's order. They're just looking for the big stuff. I would also add to this, if you haven't done it yet, there is multiple kinds of Google out there. And there is a Google called Google Scholar. This is where you can find white papers, research papers, all kinds of documentation. And you can look up market on close orders.
Yeah, I was just going to ask Marziti where he sees that at, or where you get that information. Because I know there's also one called Moo, or something like that.
Open on. Yep.
I'm looking at financialjuice.com. I have a sub there. I like Financial Juice. Signet turned me onto it a couple years ago, and I mean, it's full of a lot of noise. You can customize it some as far as what you see, what you want, and all that kind of stuff. So it can be really full of a lot of noise. But what I like about it, on the left, you got your events, your 8:30 unemployment reports and all that kind of stuff. And then you just got in the center panel all these rolling, news articles as they come out. Now, I really don't give a poot about Nike shoe stock or stuff like that. I don't care about all that kind of knick-knackery there. I do kind of follow world events and market-related stuff. But if you want a place that has really concentrated news about the market, Financial Juice is probably one of the better ones. I mean, a lot of people say, well, I like ground news. Well, ground news is great, but it's not about the market. It's about, whatever, supposedly an unbiased world news kind of thing. Financial Juice is all about the market. And so, and it comes in, just headlines just pop through as they go. You can grossly overload it, especially if you turn on Benzinga or Yahoo or some of these others, as far as capturing all their news kind of things. But or you can trim it back. They've even got read the voice to you, read the news to you. This guy's sitting in his mom's basement, and when a news article comes out, he'll say, U.S. envoy says that I think there will be Iran meetings this week. And you'll just so if you're really bored and tired of talking to your AI chatbot, you can just listen to this guy.
It also has tick strike built into it. Now, tick strike is order flow, and this is raw, unadjusted order flow. Why I like it is because it's an audio noise, and if I'm busy and I can't watch the chart, sometimes I'll turn this on, and what it makes this odd sort of toy machine gun noise, and it gets my attention. If it's moving kind of slow, then we're getting flow, but it ain't that hot. And if it just starts ripping like a lawnmower, then I know we're getting some serious flow. It brings my eyes back to the chart.
I think it was Jigsaw had one that was music horns, and the idea is you're supposed to put on headphones, and if it's in your left ear, it's going something like it's going down. If it's in your right ear, it's going up, and you're supposed to train yourself to listen to it by listening to which ear the horns are in, and then based on the pitch of the horn was the velocity of the tick. And I listened to a sample of it one time, and I thought, what in the hell is this?
I never got into that.
Yeah.
I'm sensitive about the noises. It probably is. That sounds right, but I didn't get into that myself.
It's crazy.
It is a useful tool, right? Anything that can get your eyes back when we're getting flow, to me, it has value. And I don't use it all the time, I got to admit, but there are times where I'm watching something and I'm like, just break already. And I can't just sit staring and staring. So I'm like, all right, I got to go do something else. And I'll turn that on to see if we're finally breaking or not.
Now, you do have stuff like Bookmap has got the tick thing. I forgot what it's called, but it's got a tick, kind of thing. And you can put a different tick on a separate ticky thing on different futures contracts or whatever. So you can have one on the NASDAQ, you can have one on the ES. And, again, help you get your, but it can also be incredibly annoying you got to learn that your mind, you got to spend time with it so your mind learns to filter it out, because it's just about always ticking to some extent.
If your guys are seeing my screen, you can see I highlighted a bunch of different features on Finance Juice. It has your week ahead articles,
Yeah.
your daily prep articles. If there's anything on Trump's schedule, it'll be in here. And then you've got your earnings estimates, tick strike, the voice launch, and then the various economic calendar, including days that we're not at yet, so that you can look ahead and say, well, what else do we have this week that might be important? And if it has a YouTube, then it also adds the YouTube click link so that you can go to that when that event is kicking off, and then you're able to watch the stream too. This website has a lot to it. The best part is, even if you don't pay them any money at all, you can open a free account, which allows you to use the filter. That's really important because this is a news aggregate site. It gets news from all over the place. I don't know about you, but I'm kind of picky about the news that I want. And I do not want the bobbing head, CNN, MSNBC, Fox News. I don't want any of that trash. So use the filter, even on a free account, to eliminate all of the trash that you don't want, and then save your settings so that every time you come over here, you don't have to worry about setting your settings up again.
Right.
Yeah, it's breaking news. It's even on a free account, you'll get the live news. And when it is, quote, big news, look at that. Bright red, you can't miss it. And a lot of times they'll even attach a chart with it if the news that happened moved the market. Like right here, check that out. They'll show you where it was when the news hit, and then the reaction, and they'll attach it to multiple markets. This one was the dollar and crude. Sometimes it'll be the 10-year and gold, right? Like you never quite know. It just depends on what the news is, but it's almost always the S&P and then something else. Crude and the dollar, gold and yields, something. I really like these guys. This is fantastic.
Yeah. I mean, there are other websites like Benzinga. The problem that I have with Benzinga, and I'll be honest, I hate to say the word problem. I'd rather say, the issue, the challenge. But when it comes to Benzinga, the word problem is exactly appropriate. The second you give Benzinga anything, they start just hammering your inbox and your text messages trying to promote other services that they want you to buy into, and you just get this barrage of crap. Like, I don't want this. I don't want that. I don't want that other thing.
Yeah, we quit doing business with them because of that. The Bullish Bears. Remember, we used to do weekend webinars with them.
Oh, no, that was before me. Well, I know Kevin was doing some stuff with them, but
they were selling people's emails that would sign up for those weekend events. They were they were selling the email addresses. Our clients were so pissed. And like, we didn't know. It's not our fault. We didn't know. We quit doing them after that. At least I quit doing them.
I mean, they do have a few things, though. They do have some, like Seeking Alpha level ticker research, if you want to really know something about Intel INTC and you want some detailed information about the company and stuff. They do have that kind of stuff. They do have some pre-market movers lists, and they do have a variety of decent little services. But like I'm just saying, you don't want to. You really don't want it. You really don't want to go. No.
They do a pre-market briefing and an aftermarket briefing for 3 markets around the world. So they do Asia, Europe, and the US. Every day you can come in and get the morning juice, which is the US prep. Before that, they give us Europe's close. Even though Europe isn't closed yet, they give us a Europe wrap. They tell us what happened in Europe while we were asleep. And when you get up in the morning, you can scroll back to the Japanese close and their wrap. And that's really helpful. Here's the Europe market wrap. And that came out at 6:15. Europe wasn't closed then, but they know that we're coming in. So they're like, oh, well, let's get you ready for the day. here's what happened in Europe while you were asleep. That's really helpful stuff. I check that out every day. And, you just click the link, it pops open into another page so that you don't lose it in the scrolling. And it's really helpful every day, which means in the US, if we have a day where you're just like, why did we move? What was that move today? Come in after the close and wait for our market wrap to get posted. Maybe it'll have it in there, maybe not, but it can help you try to figure out, like, what the heck happened today? Why were we doing this? Or what happened to yields? Or what's going on out there? A lot of people never even notice that those reports are in there, but they're really helpful. And then the MOO and the MOC every day too. That's always helpful. All that for free. Now, to be fair, the paid version gets a couple of headlines that the free ones don't get. And if you're on voice, you'll sometimes hear things that never get posted, or you'll hear them before they get posted. So, depending on how you're absorbing this news, there's an edge in there.
Are you saying that the daily prep articles and the week ahead prep articles are free? I don't think so.
Should be. I'm not 100% sure if those are free or not. I was just pointing out that they were there.
Okay.
I'm logged into my paid account.
Okay,
so.
gotcha. Yeah, they're not. Have to sign up for those.
That's
cool.
too bad.
That's cool.
But they are helpful.
Yeah.
The service itself is $20, $30 a month, something like that. Which, I mean, for a news aggregate, $30 seems a little much. Maybe 20, okay. But it just depends on, we do have to have tools to some extent to know what's going on. We can hunt around and find them. There's always another way. You can go in to Thinkorswim News. You can click on the ticker, and there's a way to bring up over the watch list column their news aggregate for that ticker, and they have Market Watch plus their own stuff in it. A lot of times, Thinkorswim also has the daily schedule. Like the 8:30 employment number release, but they don't have as comprehensive of one as something like Financial Juice does. So there are a variety of places to find information, and of course, if you have a trusted source on YouTube, that's definitely something to consider. But again, notice I'm going to emphasize trusted source, because everybody in the brotherhood has got a platform nowadays on that. So let's see if I think Financial Juice has a YouTube channel. Look.
I was going to mention that if you have TradingView, TradingView has news, plus they have the economic and that kind of stuff.
Yes, absolutely.
Exactly.
Yeah.
They started a new news thing.
No, there's actually a live feed. You can actually select countries and all that on there.
Yeah.
You just have to do a little research. You'll find it, but there is one for news, economic data, and there's something else too, like you have your heat map and all that stuff in there as well.
Yeah, I have the news feed up. Yeah, it's definitely. It doesn't.
Thanks for the tip on that. I didn't know that they had upgraded their news site. I'm gonna have to check that out.
Yeah, I don't know. Well, I have it up, but it doesn't update like that unless I'm not doing it right. But you can set it to give news alerts and stuff. I haven't turned mine on, but yeah.
What we're looking at on the screen is a double diagonal that one of my clients put on before the close today. It was something that we had talked about during his coaching session. But this is a trade strategy that I developed to replace the weekly iron condor, because the condors got so wide there just wasn't any money in them. this guy's got a range from 660 all the way down to 605. That's a 55-point range with money that goes up to 380 or $440 of profit, and the trade cost 226. Now, this is based on the weekly expected move, right? So when you think, well, how accurate is this trade? Go back and count how many times we closed outside the boundaries of the weekly expected move. We're looking at it right there. If you count back over the last 10 weeks, not counting OPEX or FOMC weeks, we haven't closed outside that box more than the standard deviation, which means less than 3 out of 10. So you're going to win at least 7 out of 10 of these trades consistently. If you avoid things like FOMC and OPEX, your win rate will go even higher, and it's a good strategy. So if you want to check that out, by the way, it's on the Bullish Bears under the Marcus trade in swing trade. Look under calendars, next level training library, Marcus trade, and you'll find it. It's a good trade strategy. It's called the Marcus trade, but in the trading world, it's called a double diagonal. It uses next Friday's options for the short side, and then the following Monday for the long side of the diagonal. What he built, let's put his break evens on here and see if he built it in the right spot. He sent it to me to check it, so I built it to see, what he ended up with. Oh yeah, look at that. Look at where his break-even lines are, 606 and 660, and it's way outside. Here's the call side, here's the put side, and we need price to stay inside of that. And he went all the way out here, and it still has $350 to $400 price range, depending on where it lands inside there. Darn good trade.
So he'll be able to take that off next Friday?
At any point along the way between now and next Friday, when it hits various profit targets that he's deemed enough, he'll close it out. Right? So as time goes by next week, this yellow line is going to start to look like that blue line, and he could decide on Tuesday that it's up enough and take it off. I don't know how many he put on. If he only has one, then maybe he'll hold it later in the week, but he could have 5 or 6 of these, and he might take it off as it goes, a little bit at a time.
Definitely something to study this weekend.
Yeah, I mean, look how wide that is. If he had tightened it up, he probably would have gotten it cheaper, and there would be maybe a little more money in it, right? Since it's wider, there's not as much profit, but it's really wide. Looking at that chart, plenty of room to be able to not get ran over very easily. Now he can still get hit, right? You can never get far enough away. So in theory, the trade can still lose, but this has a very high win rate, a high success rate. And when you're wrong, it's a fixed value of loss that is comparable to your profit. It's not like those out of the money option verticals that risk 9 to make 2, right? This has a much better risk to reward structure than that.
All right, man. Well, I got to run. I enjoyed it. Thank you, sir. Y'all have a good weekend. We'll see y'all Monday.
Yes, sir. You have a good weekend. I hope everybody has a good weekend.
Signet, before you go, last week you had I wasn't in a lot of the meetings last week due to the family, but you had discussed or you shared in the meeting a indicator that tracks various events like FOMC or what have you, and I guess it does something with the candles, if I recall correctly.
Yeah, I made a Thinkorswim indicator that I go in and I tell it draw a line on this day, and it draws a line on that day. It's this one right here called events. So I copy the code and I give it new dates, and it draws a line at that new date.
Okay, is that in your toss scripts?
Nope, but if you want it, you can have it. You're just going to have to manually update it every time you want to add new stuff to it. Right now, it's only going to show you the old stuff, and it's not smart, so it won't add new lines on its own.
Thanks.
And I have a quick question also for you. I like that cloud, the EMA cloud that you provided, the moving average cloud. Why? Here's a question for you. Why a cloud? What makes a cloud different from just moving averages?
It's supposed to be easier to see, especially if you're running a particular combo. So if I just add two moving averages, like say the 1020, and then I add two more averages, like the 5200, I've got two pairs, and each pair is set to a specific function. Like the 10 and 20 is theirs all by themselves, and then the 5200 is theirs all by themselves. We don't want to mix them up, and we don't want to confuse them. So if we put a ribbon or a cloud in there, then we'll see the 10 and the 20 attached by the cloud, and we'll see the 50 and the 200 attached by the cloud. So it makes it easier to visually keep track of the pair rather than just four individual lines, and then you're stuck trying to see, well, which pair is connected, which lines are attached to each other.
Because I know today it really helped with price action when one of the candles went right up to it and you couldn't get past it and just sort of just stayed there. I said, okay, this is pretty cool. Yeah. Okay.
So here on the screen, I added the 1020, no cloud, and the 5200 in a cloud. And we can do it without the clouds. You know what I mean? It's just visually appealing to see the combo attached to each other in that ribbon, as opposed to just having on this chart, for an example, nothing but lines, and then having to visually map out where the cloud is or which two are connected. These two are connected, and these two are connected. And in theory, I guess if you wanted the 2034, those two are connected, but your mind has to fill in the gap. So the cloud is just helping your mind do that. At the end of the day, it's only a visual assist, right? Because a moving average is a moving average is a moving average. So the math doesn't change. It's just supposed to help you visually accept the data.
And they all have different colors. Now the gold is there any? Because I know that it'll go from green to red to gold. It's just showing you the where it is in between those moving averages. I think is what's being conveyed. Correct?
The idea was that if the moving averages are going down and the fast one is underneath the slower one, you'll have one color. And if the moving averages are going up and the fast one is on top of the slow one, you'll have a different color.
Okay.
So the color is just telling you that the fast average has changed from being below to being above. I didn't put the colors in there to represent necessarily bullish or bearish, although in theory a coder could do that. I just changed the color to represent that the fast average has swapped from being above or below.
Okay, got it.
We actually have that right here on the screen. If I zoom in to the middle here, the moving average, the fast line crossed above the slow line and the color changed. And then the fast line crossed back down and the color changed back again. So that's all it's doing, is just telling us that the fast line has crossed over.
Okay, got it. Thank you.
In the trading world, moving averages have so many historic precedents. One of the ones that I talk about in the morning briefing is the 3-8 combo, or the 4-10 combo. In the morning briefing, I have that 3-period moving average I talk about a lot. Well, the history of that is, it's called a bear cross or a bull cross, where the 3 crosses the 10 and expands beyond the 10 far enough that it brings the 3 through the 10. So price crosses first, and then the 3 crosses, and that's a bull surge up or a bear surge down. And it's a trade trigger for various types of algos that'll recognize, okay, the shift in trend. If we have price crossing over the moving average, and then one moving average crosses over the other one, trend has changed. If we're using short-term moving averages like 310, then the short-term trend has changed. We still need intermediate trend, long-term trend, but the short-term has changed. And
Yeah, this other group I belong to, they call it the 3-8 trap.
there you go. Yeah. So every one of those combos, there's a history behind it somewhere in the marketplace. Years ago, I came across a book that used the indicator moving averages to tell a story, and they would write out paragraphs based on what those moving averages was laying out. I took them and built a little bit of an indicator that kind of tries to write out the same thing. So the idea would be, if we've got a bunch of moving averages on, we can look at them and read them out as if it was a sentence or a paragraph. I turned on the wrong one. I had turned on the toolbox and I needed the toolkit. So let me turn that one on. We could see bearish strength is increasing within a bearish trend with bearish momentum. And today we had a bear surge with it, or not just today, but in a surge. Should we flip or go the other way? Let's try oil. USO should be going up. Yeah, bullish strength within a bullish trend with bullish momentum and a surge upward.
I like that. Can we get that? That's pretty cool.
Absolutely. Let's see. Yeah, it's this one.
Signet, does that work on an intraday?
Yes.
Ooh, perfect. Thank
Also, I noticed that because I'm going through your folder, the Thinkorswim folder, you do PMZ zones and stuff like that. I'll ask the question next week after I really go through it more thoroughly, because I haven't really. I just saw something like that.
It is important to realize that when I was learning to code Thinkorswim, my Thinkorswim really started to fill up because I was finding them on the internet. I was building my own, and I had this massive amount, and my Thinkorswim started running slower and slower and slower. When I reached out to tech support, they're like, you're just going way overboard here. You got to clean this thing up. That it's your fault. It's going so slow. Get rid of this stuff. And I said, well, I don't want to lose it, and they said, well, you got to take it out and delete it. I needed a place to put all that stuff. So I opened a Discord and I started throwing it in there. Some of these that I found, I kept them just because I found them, like, oh, wow, there's a group of indicators, and I keep them. Or some might have a color change or a box or a line that I liked or a line type, and I was trying to learn how to code, so I would keep it because of that. And then some I made just to prove that I could. So there's a lot of stuff in here that is only in there because I found it and wanted to keep it, or it had a line that I liked and I wanted to use that code in the future. I don't use these tools. Most of the stuff that's in here is either just some little form of a piece of something that I wanted to keep, or something that I made and I thought would be useful to others. When I use any of this, it's to help me analyze the market, and I don't trade based on any indicator in that entire Discord. I don't trade on indicators at all. The only thing I use them for is to measure something. How much volatility, how much volume, momentum, or trend. Is it increasing? Is it decreasing? I'll use it to measure that stuff, but in no way would I trade from it. To each their own. I'm not saying you can't, just that I don't. So asking, am I using this or using that? You guys see my screen, and most days it's kind of blank, not a lot on it. Not this ugly mess that we're looking at here, but the naked raw candles is pretty much what I use. That in my drawings.
You still have all your stuff posted on your OEC, the actual coaching. Yeah, the charts posted. I need to get a couple other ones. I just wasn't sure if they were still all on there.
Yeah, on my YouTube.
Yeah.
Where it's in the video description. It
Okay.
should be there every day. If it's not, let me know. I'll grab you a copy.
Okay. Yeah, I think there's still a couple I wanted to get. I didn't get them, and I think there's also a couple of TradingView. I know you've covered a few of the scans. I think that would be excellent to kind of review as well. So.
Yep, should be there.
Thank you. Have a great weekend, Sig. We probably need to let you go, man. So you get on the bike.
I'm hoping to do something, but it's too cold for me on the bike. I'm a fair weather rider, unfortunately.
No leather, huh?
Yeah, I'm too old and handicapped to try to risk getting out there in cold weather. I'll probably lay it down or something. It's just nice that I
have
can.
a question as well.
Yeah, what's up?
Yeah, so I put it in the chat, but I'm gonna read it. Like I got a short-term 72 call for April 2nd. I paid $45 for it. Like it was right before closing. I should have, consulted with you, but I just want to ask what your opinion is. Is this going to work at all? But I think it will.
What did you get?
A hood. Robin Hood.
Yep.
Option call. The strike price is 72, and the too high.
Oh, that wasn't me.
Oh, okay.
What expiration?
April 2nd. Yeah, I just wanted to keep it for a few days.
So it is pretty short term. That's not necessarily a bad thing.
Mhm.
Next week's a short week. Always want to be cautious of a short week.
I forgot.
We got the Good Friday coming up.
Yeah, but I forgot about it.
All good. I believe me, I've made every mistake out there at least once.
Yeah, hopefully I'm gonna just close it like before.
I like that we are in a red day for the second day and that we broke that really big key level. I like that for a short term long. This would be the kind of trade that I would take if I could keep it small enough that I don't care about a loss. This would be the kind of trade I would take. But if I was looking for a high conviction trade, this would not be the trade that I would take. So if you're looking at it and you're saying, well, it was really cheap and I don't care if it loses, perfect trade.
$45 is the max loss here.
Yep. And it shouldn't lose all of that at once, right? Like even if we open really bad on Monday, it still shouldn't be max loss, maybe half, right? And if we go down on Monday, there's a lot of examples where we start the day going down and then we flip in the afternoon and we go back up. So on Monday, if you come in and it's red and you're thinking, oh no, I'm losing, don't close right away. Give it time, because there's a lot of examples, even just looking at the chart right here, where we had a red day and the next day it opened down and it fell lower and then it turned around and it rallied up high. So don't just knee jerk take a loss on Monday if we open gapped down. Let it kind of bake itself a little bit. I know you don't want to lose the whole amount, but try not to use a stop because it can just wick you out of that stop even if the stock price doesn't move that much.
That's what I thought. It went so low today and yesterday that there's no way it's not gonna do some type of correction.
Me too. I think we would turn around. Here's a good example where we had a down day and the next day it opened even lower and then it fell more, but it still rallied. So that's the kind of behavior I would like to see on Monday, not just in Hood, but in the market in general. I'd really like to see that. That's why I bought those XLF calls going into the close today. So I don't see anything wrong with this. I think it's not bad at all. As long as you realize that these kind of trades are not the high conviction kind of trades that we would want. Say, would I usually ask the question like this: would you buy 100 of these? I wouldn't, right?
No.
Because I wouldn't want to lose that much money. But would I buy, like 1 or 2, 3? Yeah, why not? Low conviction, nice payout if we're right, but we don't really have a reason to go long other than it's been falling for a few days. If we've seen a market that had been running to the upside for a couple of weeks and it just pulled back for 2 days or 3 days, I'd be much more interested in a high conviction long because it's the direction we had already been moving. But Hood has been consistently moving lower and lower and lower. Even if you get a 2-day bump to the upside, it's probably still going to go lower in the long term. So your trade is a counter trend trade against the 2 red days. And as long as you're okay with that, I'm in agreement with you. I think a 1 or 2-day move to the upside is very likely. Very likely.
Thank you.
Quick
Makes sense?
quick thing. I wanted to get your opinion. I think I already asked you about this, but I just want to make sure. So on, I've been using the the fibs on the 5-minute chart. When trading, that's okay to use, right? I mean, I've been getting good results in terms of staying out of bad trades or getting into good trades. Is that what you use when you're trading? Do you use the fibs the same time that you might be trading?
Absolutely. I don't trade a 5-minute, but I use it for my fibs. 100%. That's exactly the time frame I use. Some people use a 3-minute or a 15-minute or a 30-minute, and you want to use what suits you best. For me, the 5 is perfect for my fibs. That's exactly what I use. My actual trade chart isn't a 5, but I'm watching the 5, and it's what I measure my fibs with is a 5.
Okay, because I use when I like yourself, I don't trade before 30 minutes because it's like the market has to settle, and I find that it's schizophrenic before then. So then I put my fibs on when it went 30 minutes, right into 30 minutes, and I start the fibs, and I just noticed the price action seems to do a lot better during that time. So
that's my style. I agree with you 100%. That works really good for me.
Okay. All right.
But it is a versatile system, and I know people that has used it on a 3 and a 15, and both of those people, which are 2 different people, they both love their time frame. So the nice thing is, if you ever want to go to a different time frame, you can take it with you. It'll work.
Great. Thanks, Ignite.
Yep.
Hey, Signet, how did you do that before you take that off there? How did you do that before you were able to adjust that without messing that setup? Does that make sense what I'm saying? So in other words, you have this one right here saved maybe as default, but then you go and you put the 50s or something like that, or quarters. There was a way you did something of that nature where you changed everything to quarters and you didn't mess this up. Does that make sense what I'm saying?
Yeah, there's more than one. So there's this one, Fibonacci retracements.
Yep.
But if you keep going lower, there's this one, quadrant lines. In theory, these 2 are exactly the same.
Okay. But does it give you extensions beyond that on the quadrant lines?
Yep.
Above and below. Okay.
Yep.
Right.
The other one that is out there is this one called Fibonacci extensions, and that's a 3-click instead of a 2-click.
Yeah.
So I don't use it as much, but in theory, if you do need a third one, you can use that one too. And I was using this. Let me do it this way. There's one that I use that I use really just for halves, only for halves. And it's this one on the bottom now, but it didn't used to be. So this one, I keep the edges kind of grayed out. They're there, but they're really hidden. And the middle line is what really pops when I draw it. And that's what I use this for. But back in the day, I didn't want to use my quadrants for that. And I was like, man, I need another drawing. So I was using this 3-click one, this Fibonacci extension. So what I would do is I'd mark the high, and then I'd mark the low, and then I'd run back up and I'd mark that high. And when you do that, you get the same fibs that we all use. You just have to put the first and the third at the same spot. And if you do that, it'll work perfectly. So that's a way that you could get a third one and have it saved exactly how you want it and not have to mess up your other drawings.
Yeah, because I'm looking for one just like this, but with quarters in between. And I wasn't sure if there was a way to save. I mean, it'd be nice if they would go in and allow you to save different settings, but they don't have that in there. They are making adjustments to some of the stuff. So
TradingView does, and that's really awesome. You can save, you can name them and save different line types, different colors, with the cloud, without the cloud. It's so nice over there. I wish Thinkorswim would update some of this stuff.
Yeah, I don't know what's wrong with Thinkorswim. Yeah. But they were like that even when they were with the other place. They
TD Ameritrade.
Yeah, they wouldn't update nothing.
Yeah, it's getting worse. See, they bought it from Tom, and they pretty much left it the way they bought it. They've made adjustments, don't get me wrong, but they haven't been like wow adjustments. Comfort of living. They've just been strengthening the server and that sort of stuff. Nothing really impressive at all, in my opinion. Since Tom left and they bought it from him, it's been underwhelming, to say the least.
Yeah.
I'll be really excited if TradingView steps up this year and becomes the dominant powerhouse for the options analysis platform. That's going to be fantastic.
The only thing I'm a little skittish about is one thing about Schwab. You can call them up and discuss a problem. TradingView, you can't do any of that.
That's good to know. I had never tried, so I never even thought about it. But you're right. If we can't reach out to them when we have issues, then that sucks. I know that Thinkorswim, when it was owned by TD Ameritrade, if you reached out to the help desk and you had options questions, it wasn't always so successful. I had a coaching client who called me, I don't know, like 6:15 at night. He had gotten assigned SPY after the close, and it was because of the help desk telling him to do something that he shouldn't have done, and he ended up assigned, and now he was short like 200 shares of SPY, and he was freaking out. And it was all because the help desk told him something about his options that was not true. They are not options traders. They're just help people. Usually more of like tech support rather than trade support. They steered him wrong and ended up getting assigned. But that was with TD Ameritrade, and maybe Schwab has actual traders on the help desk now. Maybe.
Well, they've helped me.
I don't know.
They helped me out when I thought I was screwed. And they kept me from, being that way. Some of them are good, some of them aren't,
Yeah, I guess it's just luck of the draw. Well, guys, let's wrap it up.
Okay.
I hope you all have a good weekend.
You too. Thanks. This was great.
Thank you, Signet.
Thanks, Sigmund.
Absolutely. Glad to help. Have a good weekend, everybody.